If you're stacking silver and you understand the reason that you want to be heavier in silver, much heavier in silver now, is because of the ratio. At 80 to 1, man's ratio is 80 to 1. It takes 80 ounces of silver to buy 1 ounce of gold. Comes out of the ground at 10 to 1, simply because of the transport costs and logistics. So silver was discounted from the natural ratio of 10 to 1. But 80 to 1 is stupid. If it comes down to 40 to 1, what that means basically is that it has outperformed gold 2 to 1. So if you think that gold, and you think rightly that gold is going to hold its purchasing power for you, silver is going to even do better than that.
Global powers appear to be deliberately orchestrating the collapse of the United States, claims market analyst Bill Holter. He posits that the seemingly irrational policies being implemented are too illogical to be accidental. Holter suggests that this strategy is aimed at eliminating the U.S. as a geopolitical impediment, thereby allowing other nations to implement their preferred policies unchallenged. The consequences of such actions could be far-reaching, affecting not only the U.S. economy, but also the global financial landscape. Recent fluctuations in gold and silver prices have sparked concern among investors. According to Holter, the temporary pause in their upward momentum is a natural market occurrence exacerbated by deliberate interventions aimed at suppressing prices. He notes that after reaching significant highs, both metals were overbought, necessitating a period of correction. Despite these interventions, Holter remains optimistic about the long-term prospects for gold and silver, predicting further gains once the current market digestion phase concludes. Now we'll show you the best clips of latest interview, but first smash the subscribe button, turn on notifications, and share this video with a silver bug as more people need to know. Enjoy the episode.
As far as the metals are concerned, they broke out. I put an article out on May 11th. Not an article, basically. I put it up on my website. I showed some charts and said that it is likely that gold would go to new highs. Silver would break over $30. And that did happen. We got up to about $32.50 on silver. We got to $24.50 on gold. They were both severely overbought, and were overbought for a fair amount of time. So those gains were naturally going to be digested. And of course, you got the powers that be that don't want higher gold, don't want higher silver prices because they're direct competition to fiat. I think it was last Friday. There was basically the amount of silver that's mined in a year's time that was equal to the amount of trading that was done on COMEX on Friday. So, I mean, they smashed this with paper again. I did put an article up, I believe it was Sunday or Monday, with the same charts. We're definitely no longer overbought. We're closer to oversold than overbought. Silver, well, first we'll start with gold. Gold has pulled back to this 2280, 2300 level. So we've had a pullback there. Silver has pulled back. I think it got down as low as 2875, 2880, something like that. And on the chart that I showed, there's definitely support at the 2850, 29 level. And there's a moving average that's right here at 29. And if you look at what I talked about in the first article, the MACD, the moving average convergence divergence, has declined, and at this point, fairly close to forming another hook to turning to the upside. So silver pulling back to 29 is absolutely where you should have thought that it would pull back. I mean, nothing goes straight up. Nothing will go straight up until we have a revaluation. Then it'll be like a light switch, and poof, you'll have new prices that are totally unrecognizable. On this move, on the next move higher, and I think the next move higher, you could see it beginning immediately. I think we're in the bottoming. We're digging on that $29 level as we speak. I think this is going to bring us probably to the 34 to 37 level. We'll be overbought, and you'll see another pullback. And then I believe that 3250, the previous high, or 32 range, will again be the support. So this is it's totally natural. Anybody who was disappointed that gold or silver didn't keep going once it hit 32, 3250, you don't understand how markets, normal markets work. And these are not normal markets. But when you get as severely overbought as we were, you're going to get a pullback, and we have had that point. If there is a confiscation of gold, it won't be impossible, but it'll be very difficult to confiscate eagles, because eagles do not circulate as currency. They don't circulate as coin. Essentially, you are buying them from the U.S. Mint. The U.S. Mint produces the gold eagles, and when they get paid, they're making a profit. So can they really sell you an eagle today and then next week come back and say, but you have to sell them back to us? There'd be lawsuits forever and ever on that. Now, could they say gold is illegal? You got to turn your bars in. You got to turn your generic coins in. You got to turn your maple leafs in, your Krugrands, et cetera, et cetera. Yeah, that could be done with a stroke of a pen. And there's really, because the Supreme Court never even really ruled on it back in 1933, that could be done easily. But taking eagles, that would be very difficult. Going one step further on that person's question, if you're stacking silver and you understand the reason that you want to be heavier in silver, much, much heavier in silver now, is because of the ratio. At 80 to 1, man's ratio is 80 to 1. It takes 80 ounces of silver to buy 1 ounce of gold. Comes out of the ground at 10 to 1. Man discounted it to 16 to 1 for hundreds of years, simply because of the transport costs and logistics. So silver was discounted from the natural ratio of 10 to 1. But 80 to 1 is stupid. If it comes down to 40 to 1, what that means basically is that it has outperformed gold 2 to 1. So if you think that gold, and you think rightly that gold is going to hold its purchasing power for you, silver is going to even do better than that. It absolutely matters. An 80 to 1 silver to gold ratio, what that's saying is that silver is grossly undervalued to gold. So silver is a steal. And if I said if, I should have said when, because ultimately the paper markets are going to break, and gold and silver and other commodities are not going to be controlled by paper markets. They're going to be controlled by cash markets. So yeah, that ratio will come down. Where it comes down to, I don't know. Does it come down to 40 to 1 and that's it? Does it come down to 30? Does it come down to 20? You've got some people out there like Big Swear talking about silver is going to go 1 to 1. Silver is going to be more valuable than gold. And I don't see that in any possibility, in any way, shape, or form. There's no way that's going to happen. But I do know where things are right now. Silver is grossly undervalued to gold and a much better purchase. In my opinion, silver is the cheapest asset on the planet.
In today's news recap, silver's bullish break under threat with aggressive sellers parked above. Silver teetering above support zone. It could be an important day for silver, threatening to break the uptrend that kicked off the bullish run back in February. Given its importance, it comes across as an ideal level to build a trade around, regardless of how the price action evolves from here. For now, you can see silver is resting on uptrend support, having pushed below it earlier today. The reversal possibly reflecting the proximity of the 50-day moving average, which acted as support earlier in June. Sell the break should the price break and close below the uptrend, and 50-day moving average, you could sell with stop loss above the trend line for protection, or buy the bounce. Should uptrend support hold, you could buy with a stop loss below either the uptrend or 50-day moving average, depending on your risk tolerance and trade target. The first upside target would be the top of the bull flag, currently found at $30.50. If that were to give way, $38.57, $31,548, and May highs above $30.50 would be the next levels to watch. Key event risk looms. As for key drivers in the days ahead, it's hard to go past the U.S. core PCE deflator on Friday, given the implications for the Fed rate outlook and U.S. dollar. From a fundamental perspective, silver and other non-interest-bearing assets would normally benefit from a weaker greenback and lower U.S. borrowing costs, creating tailwinds from a FX perspective and reducing the opportunity cost of holding long silver positions. Now we'll show you the best clips of the latest interviewer, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
I think you're already starting to see that. That's why Shanghai prices are $30, $40 higher on gold and $3 to $4 higher on silver. You're already seeing the cash markets, the jaws are starting to open between the cash markets and the paper markets. And what's happening is you're having buying on LBMA, buying on COMEX, getting metal delivered out, and it's being shipped to Shanghai. It's an arbitrage. So I think you're already seeing that. And going one step further, and this is the big step. There's questioning now of the amount of gold held by China. I think they say they own like 2,700 tons or 2,900 tons or something like that. And I'm going to say it was like 5 or 6 years ago on the back of a napkin between what had been, first off, remember that almost nothing gets exported. There's no gold that gets exported from China. They have production of roughly 400 tons per year. And if you look at the Shanghai imports, I mean, those have been, sky high, 1,000, 2,000 tons per year. So even if you look at just the 400 tons per year that is produced within China, I mean, over 10 years, that's 4,000 tons. And they've been doing this now since, there's been a concerted effort to produce gold in China since the early 2000s. So, is it 6,000, 8,000? I mean, on the back of it, I could have shown you where China had 25,000 tons already. So, I mean, they're probably 30, 35, 40,000 tons at this point. Once the BRICS currency does get released, and they have said that gold is going to be one of the components that backs the currency. Now, one of the questions is how much, how big of a percentage? Is it 20%? Is it 40%? I don't think it'll be more than 40%. But then you got to do the math, because if the BRICS currency is what settles trade worldwide, there's got to be a lot of currency. And that means there's got to be either a lot of gold, or the price of gold has got to be a lot higher for the gold that's actually backing the currency. So long story short, I do think that for their own benefit, if you're sitting on 30, 40,000 tons of gold, wouldn't you want to revalue that higher at some point? So yeah, I think absolutely China is in their best interest going to revalue gold higher. And one of the things that does is it makes it really hard for anyone to catch up to their hoard, because it's so costly to purchase each ounce. So, I mean, if they revalued it to pick a number, 10,000, 20,000, 50,000, whatever, it would make it really difficult for nations that didn't have gold but want gold to catch up in the game. Something out there, and this may help some people to understand why or how exactly this scam works. So you go to your broker and you deposit $100,000, $1 million, $10 million, whatever, and you do a bunch of trades, and every trade costs you $7.95. Do you really believe that a business model that charges customers to trade $1 million worth of stock and the commission is $7.95 is actually a business model. I mean, these companies have huge skyscrapers. They got private jets. The upper echelon drive around in Lamborghinis. How do they do that? On $7.95 per trade. It's an impossibility. The way they do that is you bring your $1 million in, you buy a bunch of stocks, and before the end of the day, those stocks are already lent out. That's how they make their money. They lend them out to short sellers. They lend them out to be used as collateral. And if they're lent out, are they yours? Basically, I mean, yeah, nickel's got value, and nickel might be a nickel. I don't even know where it is now, but it might be worth 6 or 7 cents. Who knows? But who cares? What's going to have value when all this is said and done is not going to be dollars. It's not going to be current coinage. It's going to be what's real, what's inside the coin. And pre-1964 dimes and quarters are 90% silver. And that's what they're valued at, is the silver value. So, I mean, don't get caught up in worrying about, quote, nickels or dimes, current nickels or dimes, because that's what they are. They're nothings. I mean, you could have $1,000 worth of nickels or dimes, and it might be, it might, in the terms of nickels, because of the nickel that's in there, like I said, it might be worth 6 or 7 cents. So, but I mean, look at a dime. A dime is worth $2 or a little more than $2 at this point, 1964. So, your true store of value and the way things will be bartered when the system goes down, the way you're going to pay a farmer is going to be dimes and quarters pre-1964 and earlier. It pretty much doesn't matter. You should only keep in a bank, what your bills are going to be for the next 6 months to a year. Even if your bank doesn't fail, you're going to be left with dollars that are going to be devalued in a drastic manner. But my thought process is the banks as a whole are going to collapse. There's not going to be anything standing. I guess the best way to say it is, okay, so they don't invest in real estate, but there's been a global run out of U.S. Treasuries. Your bank definitely holds U.S. Treasuries. So, now they've had their balance sheet devalued.
What do you think of Bill Holter's take? Is the U.S. under attack, and will the dollar inevitably collapse? Are you buying more gold and silver in this dip? Post in the comments section down below your honest opinion and share your journey with us. Subscribe if you have not yet done so. Send a super thanks if you want to directly support our channel, and keep stacking above all. Thanks for watching till the end now. Check this video right here because it's a perfect fit for you. I see you on the other side.